morning, everybody. Welcome back to the Daily Covered Caller. My name is Max Convexity. Let's see what's going on in the option-based ETF world this morning. Why don't we? All right, we'll start with Defiance like we always do. Start over here with JEPY. These guys sold at 5,600 strike. Well, right now the market's trading at 55.96, so it's 3.45 points in the money. Instead of making 260,000, they're only realizing 213,000, getting the month off to a good start with the 10 cents earnings per share. So far, I mean, if we finish here, Triple QI, they sold at 19,370 strike. Right now the market, which is NASDAQ, NDX is at 19,404. So they're out of the money. So they're realizing the whole million they're going for, which comes to about 21 cents a share. Nice job, guys. IWMY, these guys sold the 2210 strike. Right now the market for Russell, which is what IWMY sells options on, is at 2,000. So it's about 10 points in the money, which is what this says here. So instead of making 800,000, they're only realizing 255 at this point in the day. Okay, so now we're going to look at USOY. USOY has sold the 77 strike option that expires today. Let's just look at this one graphically. Oil's pulling back this morning, I saw. Yeah, oil's pulling back, but if the price of USO can get up in the green box, they won't have a loss. Otherwise, they're going to have a loss. They have till the end of the day to do that. Okay, so let's see. What else should we look at today? Let's see how some of the other yield max funds are doing. All right, Tesla's up a little bit. Coinbase. Boy, Coinbase is down. MicroStrategies, I bet it's down too. Yeah, MicroStrategies down. What about Nvidia? It's pulling back, or it's about where it was yesterday. All right. What about let's see what else we have. What about AMD? Just grinding. We'll see what Amazon's doing. Yeah, Amazon's up today, trying to take out the 200-day moving average. The last time it did that, it mounted a rally from 170 to 182. We'll see if we can mount a rally here from 175, maybe to 185. We'll see. I mean, we'll see, or we'll see if it stays on the underside of the 200-day moving average. That's usually a bearish sign. So we'll see. All right, so now let's look at the buffer report and some other stuff here. All right, well, that's the buffer report. That's the new buffer report. That's just the results for this month. And those don't update live, so those are the same results that we talked about yesterday. Those update once at the end of the day. All right, here's the buffer report. Let's just kind of look for the standouts. SPY-T, that doesn't surprise me. It's a great fund. SPY-T is outperforming the benchmark, as is XDTE, which also doesn't surprise me. And why doesn't that surprise me? Because we had a gap up last night. Okay, so anytime we have a gap up, these freaking guys over at Roundhill figured out how to monetize it. Genius little plan. Now they're trading yield for it, though. They don't get as much yield as other funds, but they're getting more upside. Not more upside, period. More upside in a bullish market. They're going to get less upside in a bearish market. But yeah, we did have a gap. The gap was 55.94 to 56.28. So it's 30-point gap on a 5,000 points. It's about half a percent. And I think we see that in the results. The market makers are giving them credit for that gap. All right, so let's see what's standing out on the bad side, if any. I don't really see. I mean, other than crypto, which it's not really bad. It's just because crypto's down and oil's down. This iSpy, I don't think this one gets good quotes or whatever. There's no way that iSpy's down. That's not a thing. They do the same thing that XDTE and that JEPY does. So they should be up roughly about the same amount as these guys. So, or they do something similar. All right. So now what can we get ourselves in the middle of? Oh yeah, a letter. So I got a comment from a viewer. So this person reacted to the Defiance when I said yesterday, I announced that they were gigantic distributions. This person said, the question is, can these funds recover from the ex-dividend deduction, or will they slip back down to a second reverse split? The answer is second reverse split, of course. And Ron jumped in for me. I didn't have time to answer it yet, and he jumped in and answered for me. They will inevitably go down. Now, I would agree with Ron with caveats, though. Okay, let me just read what I wrote, and then I want to comment on my own letter. Depends. If the SPX is up as much as the dividend pays in a given year, then it will recover and it won't reverse split. So if the SPX is up 45% in a year when JEPY pays a 45% distribution, it will be a neutral event. The SPX is only up 20% in a year and JEPY pays 45%. JEPY's NAV will decline by at least 25%. Okay, it has to. There's no free money. All right. So if you consider most years, the market's up around 10%. Just saying an average year, the market's up 10%. 10 minus 45, which is what the JEPY pays in an average year, is negative 35%. So that's what I figure. I figure at an average year, this ETF will lose about 35% of its value. Okay. Now, of course, don't forget, though, it's paying a 45% yield. So you're still making 10% total return, pretty much just like somebody that just held the stock. Like I say, there's no free money, right? It's not like you do a covered call and money, you can't shit money out of the sky. There's no such thing as free money. Okay. So the covered call strategy just changes the risk around and changes what form the money's in. Is it in the form of income, or is it in the form of an equity type investment, buy and hold? Okay. So then I wrote, covered calls are just financial planning tools. The tools can take an equity investment like a stock and convert it into a stream of income. Don't think of these as the next, let me fix this really fast. Stream of income. Don't think of these as the next big investment that's going to make you rich. This investment isn't meant to be a better investment than other growth investments. The biggest misconception about these funds is that they are growth investments at all. People who know how to use covered call funds have made money somewhere else. They've experienced growth through a company they work at, through owning a company, through saving their money, through buy and hold, whatever. Covered calls aren't to make money. Covered calls are for after you've made the money. Okay. They're just financial planning tools. Just remember, you can only sell the stock once and then it's gone. Okay. If you have stock and use a covered call strategy, it can provide an income for years to come without having to sell the stock. Remember, once you sell the stock's gone, and you lock in the price you got for it till the end of time. All right. That happened to me once, and I locked in a price of Eli Lilly like at 50, and it's like at 600 now. Okay. But anyway, wonder if I had retired from Apple in 2010. I hadn't, but let's just say I had. Wonder if I'd retired from Eli Lilly in 2010, whatever. Wonder if I retired from a big company whose stock is up. That's the thing. Okay. And I needed money in retirement. So I sold Apple in 2010 to finance my retirement, right? I'd made plenty of money in Apple over the years, right? I mean, if I'd had it since 1990, let's say I'd worked there 20 years. Yeah, that's nice. Wonderful, right? The person that sold covered calls instead of selling the Apple stock, okay, so think about this. If you just sold the Apple stock, you like I say, you can only sell it once, you lock in the price. Well, the price in 2010 was 7 on a split adjusted basis. Right now it's trading at 228. Okay. How smart was the guy that sold the stock? The person that taught me how to sell covered calls is still selling them and it sold them for a lifetime. It's generated a lifetime of income. All right. They never had to sell any stock. Guess what? That stock's worth a hell of a lot more than it was in 1988 when they showed me how to sell covered calls. Okay. Their stock's probably up 5 or 10x over the past 30 years. Think about that. Think of a covered call as like turning your stock that you own into a rent house or a passive stream of income where you don't have to sell the stock, but you can still collect the rent. That's the whole idea. That's the whole idea. So yes, that's the biggest number one misconception about the covered calls is somebody who sees it and then they hear everyone talking about they're a great investment. And they are a great income investment. But anyway, and they want to do this investment and they see it's making 50% yield and they don't understand. Maybe if you aren't an income investor in equity, buy and hold investing, there's no such thing as yield. Yield may be 1% or something. But in income investing, yield, people that are income investors, they know that yield does not equal total return. Total return is two separate things. So that's the biggest misconception is don't use covered calls to try to accumulate the money. You got to go make the money somewhere else. Go work 30 years. Open a business. Buy crypto in 2010. Sell it in 2020. You have to bring the money with you. This covered calls won't make the money for you, but they show you how to reallocate the money from something where you can't sell to something where you can have some income and still have the best of both worlds and realize the appreciation from the asset that you didn't have to sell, right? All right. Well, I hope that made sense to everybody. Leave me a comment if it did. Tell me how you guys use covered calls. There's not just one way to use them. There probably are people that do use covered call strategies to try to accumulate wealth. You can make variations to the strategy. I'm not saying it can't be done, but generally the best use for a covered call strategy is you already have $1 million and you're trying to figure out how to get 50,000 a year income off it. That's what covered calls are good for. They aren't for, hey, I only have 50,000 and I'm trying to get to $1 million. You got to figure that out on your own, right? All right. Well, like I say, let me know if it helped or if it didn't. Let me know that also. Hope you guys have a good day. Let's check into the market one more time and see if it's selling off. All right, so there's the S&P. We're right about at the top line, so that's max profit. We'll see what the NASDAQ is doing. Same thing, it's over the top line, so it's max profit for triple QY. And we'll look at Russell. Russell's about to lose their profit. They're getting close to the bottom of the box. Now, let's check the spreadsheet. The spreadsheet update's a little bit late, but yeah, they instead of 800,000, they're only realizing 226 at this time. And if it keeps falling, that they may not even realize that. Well, all right, guys, I appreciate you for being here. You have a wonderful day. Take care.